Example, on November 1st, X1, Renter Co. paid $18,000 of cash to Landlord Co. for the following 18-month rental period to end on April 30th, X3. Record all required entries and adjusting entries for Renter Co. from 20X1 to 20X3 as per the matching principle. Per the matching principle, when should the rent expense be recognized? Let's diagram it out. On November 1st, the payment of $18,000 was made, and it's to cover a rental period that will go into April 30th, X3. $18,000 for 18 months of rent. That will be $1,000 per month. I've created 18 $1,000 payments here to represent the prepaid rent expense of $18,000. The first 2 months, which are in X1, that'll be $2,000 that should be expensed. Then in X2, it's 12 months for $12,000. And then in X3, it's 4 months for $4,000. The prepaid rent expense has now been used up. Let's look at the journal entries. On November 1st, X1, we credit cash $18,000, showing that cash reduced. The question is, do we recognize an expense now, or are we paying for something and we will receive the benefit later? The answer is we are paying for a benefit to be received in the future. Therefore, we cannot record this as expense, but rather we will record it as an asset called prepaid rent expense. Prepaid rent expense is debited $18,000. Let's update the ledger account down below by debiting that $18,000. As of the end of the year, we've actually received $2,000 worth of benefit. We need to debit rent expense $2,000 and reduce the asset, prepaid rent expense, by crediting it $2,000. By posting that into the ledger, we now have a credit of $2,000, and the new balance of our prepaid rent expense is $16,000. This asset is being used up, and as it's used up, we record the related expense. We now start the year X2 with $16,000 of prepaid rent expense, which will then use up a little bit more. On 12/31/X2, we say, wow, we still show we have $16,000 of prepaid rent, but we've used up 12 months worth of rent. So we'll have to debit rent expense $12,000 and credit prepaid rent expense to show it's been used up $12,000. We post that to the ledger. The new balance in prepaid rent expense at the end of X2 is now a debit of $4,000, which we then will use up in X3. Debit rent expense $4,000 and credit prepaid rent expense, using that up, $4,000, resulting in an ending prepaid rent expense balance at the end of X3 of 0. Back to the big picture. In X1, we recognize $2,000 of rent expense. X2, $12,000 of rent expense. And X3, $4,000 of rent expense. Do our recognized expenses comply with the matching principle? Yes, they do.